Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going out there? It's July 24th. And I'm Frank Curzio at the Wall Street Unplugged podcast, where we break the headlines and tell you what's really moving these markets. So, staying on the interview format here. Got a good one coming up for you. This one's with my buddy, Andrew Horowitz. And Andrew, I love having on. He also the host of Disciplined Investor podcast. Horowitz and Company also manages money because he's another guy like last week, Jumper Cheese. You can go anywhere with the interview. And we're going to talk about Trump, an assassination attempt, Biden dropped out of the race. How did those factor into equities and your market strategy going forward? Going to talk about the Fed's coming rate cuts, 100% chance now, which is not a chance, but 100%. That's what they're factoring for a September cut, the first one, but there's going to be more in the way. However, it may not be a positive for equities that everyone's saying. So we're going to break this down, talk about that more. Also, Andrew, like always, going to share his favorite ideas. He has an amazing track record, probably better than his management company when it comes to sharing ideas on this podcast. And he's going to have at least 3-4 ideas going to share in this interview, which is really, really cool. But he does have a great track record for the stocks he gives us on this podcast. So I always tell him more recommendations is great. I know my audience loves him, and I love him as well. So sit back and enjoy. And here's my interview with the one and only Andrew Horowitz. Andrew Horowitz, how's it going, man? Good to see you.
Hey, Frank Curzio, better to see you.
Well, how you doing? Your voice sounds a little sore there, buddy. Everything okay?
Well, long weekend. Long weekend, and no, healthy as a horse, but was out in Miami on Saturday night, so I guess I was talking too loud or something. Who knows?
Yeah.
But this is what we need. You and I. That's our bread and butter is the voice.
It is the voice. Unfortunately, we got a video going. I mean, we do voice for a reason, both of us, but we do have a little video every now and then.
Yeah.
So
We gotta say we have a face for radio.
I got to tell you, I came back from Vegas this week too, and prices there are absolutely insane. I mean, it's so insane that, I mean, chocolate bars that my daughter wanted to get, a chocolate bar from one of these places, it was like $8 for a chocolate bar. I'm like, it just every single thing. It was everything that we bought. It was absolutely insane on the strip compared to obviously being off the strip. But if someone's been going there for a long time, it's been a little crazy right now prices. But I just can't see this being sustained. I don't know. Come
down to South Florida. I was out at a restaurant on Saturday night. It's called Sexy Fish. Supposedly it's a $40 million build out. Wow, my voice does sound terrible. $40 million build out of this property. But I looked at the wine list and I'm like, no. And they had, multiple pages of this wine list. The most expensive bottle was $65,000 for, I don't even know what it was. I don't know.
Did you get it? I know you're part of the 1%.
I got two.
Yeah, I figured that. Yo, right here, buddy. Hey, come over here. Why not me for the whole place? But
most of the wines, we got a bottle that was, I think, $70, which you probably buy in Publix for $3. It was terrible wine, but we weren't spending the money. We're not spending the money. This is no way. But the food was reasonable. We had this. It was like kind of a sushi vibe, but the atmosphere was just beautiful. It was one of these things you go. Why do you go to certain places, right? You know what I mean? It was just beautiful. And the presentations were beautiful. The people were beautiful. It was just a great Saturday evening. And we didn't have to spend crazy, crazy money because we just kind of picked around, the menu. But definitely stayed away from the wine.
Well, we're in good hands because the CPI is coming down, which is supposed to be bad news, but that's great news, right? Because the Fed is obviously going to cut. We're going to get to so much because so much has happened in the past couple of weeks, especially with politics and Trump and Biden dropping out. But let's start this as we're going to prices because what I'm seeing is prices aren't coming down for a lot of places. Maybe you might see Walmart mention it here and some other places, like Target, but I haven't seen them coming down. I haven't seen rentals coming down. I haven't seen it come down meaningfully. But yet the CPI was decent, means the Fed's going to cut. Is this actually good news? Because usually when we see this, not usually, every single time we've seen this over the past 50 years, when the Fed actually pivots, especially when they start cutting on that pivot, we see the market come down and it starts coming down. Well, here comes September. I say, be careful what you're wishing for. What do you see now that there's 100% probability, 100% priced into a September cut now?
Which I find very weird because usually won't get a cut into an election year. They don't want to have any kind of, apparent or maybe even thinkable idea that the Fed is being political. But I'm still thinking it's not going to happen in September. I think they just, they might as well wait just a couple more months. And if they really need to go in December. But I agree with you. It is not a good sign when the Fed cuts. I know everybody's all like, hey, the Fed's cutting. And they got this idea that, wow, it's back to, I don't know, post-financial crisis, post-COVID, when the Fed flooded the markets with all sorts of stuff. This is different. This is not a crisis cut. This is a cut because they think that they've done too much to hold back the economy. So they're making adjustments to their own numbers. What's really fascinating, though, is that the Fed wants to cut. The Fed needs to cut. And the reason for that is that we're paying such a high price for our debt service. And the Fed knows that. The cost of our capital. If you or I, had this kind of balance sheet, we'd be out of business a long time ago.
Yeah.
Right? And there's no way after a while that you can keep up with that debt service. So what's happening is the Fed realizes that they need to do so. So we went from inflation to maybe hyperinflation to disinflation. And now one data point, but the last number on the CPI was actually deflation. So the Fed is like, okay, let's take this opportunity. Now, the PPI that came out a day later didn't show the same thing. In fact, the core was pretty hot overall, right? It showed a pretty big number. It's fascinating, though, that the Fed will wait long enough when the numbers don't agree with their basic thesis. But one number, it's like, hey, look, we conquered it again. And I think the other thing that everybody needs to understand, this, Frank, we talked about this, is that inflation will moderate. Just from a calculus standpoint, right? Just from a calculable, unless we become Argentina or Venezuela, there's no way we're going to see inflation that goes off the rails forever. It's going to moderate. The problem, though, is even if inflation is at zero right now, prices, as you mentioned in Vegas and I mentioned in Miami,
tremendously
are absurd. So what do we have? We have a situation where margins amazingly held up by many companies. We see the net interest margin of banks. We could talk about that a little bit with the earnings they had last week. Yield curve steepening has been really good for them recently. We saw some all-time highs in some of the banks and the investment companies, the major financials recently. Home builders, holy mackerel. Would you ever thought that home builders in an environment with an increasing interest rate would actually be at all-time highs? D.R. Horton hit an all-time high last week, blew out the numbers. Lennar, unbelievable numbers. Look at the home builders ETF, rocketing higher. I called a short on that, closed it really quickly. I'm like, you know what? This is not playing. Like 2 days later, I'm like, I'm out. And it just went straight up. So there's a lot of strange things happening. And this is all, I'll end with this point on this, is that it's still all about what happened during COVID, the exceptional amount of stimulus that went out, the Inflation Reduction Act, which was the anti-inflation stimulus bill.
Name. That's such a great name.
And it's all part of it, Frank, right? It's all continuing with this flush of money. And I think the reality of the excess that was built up, sovereign wealth funds that are sticking money into our markets, and then the euphoria surrounding the latest narrative, which is, not the Fed rate cut, but with AI. So it's all kind of this infectious FOMO, this, let's get in on the bandwagon. People have seen how great it's been over the last X number of years, and thinking, just to bring this full circle now, that lower interest rates are another catalyst towards the next leg of stock market being higher. But in fact, I believe, and I think what you're saying is also that maybe it's actually a reality check that the economy is slowing down.
Yeah, I mean, the Fed cuts for one reason, right? They think the economy's slowing, right? So you got to put that in perspective. So just like when they're raising rates, the reason why the market almost always goes up during that tightening cycle is because the economy is so strong, they're trying to rein it in, right? So this is the opposite. Now the Fed's finally saying, okay, I see a slowdown coming. So now it's time to cut. And you have to realize that, because that's not the great news that everyone thinks it is. Like, everything's going to roar higher. No, there's going to be certain beneficiaries. Maybe banks aren't as beneficiaries this time because of their net interest income, right, it has surged, right, because interest rates go high, they do very, very well, and they've done much better because rates were higher for much longer than anyone anticipated. We talk about cutting rates for the last 12 months at least. We thought it would happen by now. But that rotation and where do we go from here is kind of tough because you brought up an interesting point. I want to get your opinion here. It's a tough question, but we got the smartest guy in the world on, so that's what I'm asking you.
That's you, obviously.
Two really, really smart guys. We'll figure this out. No problem.
Right.
Look at the history of the market, right? And you've never seen this happen before. And people say, well, the past. And when it comes to history, it often rhymes. And then, we see this happen. We've never seen home builders, like nobody at all, 0%, 0.000% predicted that home builders would absolutely surge if interest rates are going to go this high, right? And a lot of people didn't think the market's going to surge to record levels, right? We didn't see margins go higher. Margins are going higher as all this is taking place with this massive tightening cycle that was supposed to slow down the economy. It appears like it didn't really slow it down that much, right? It really didn't. It curbed inflation a little. Why is it different this time when you look back at 50, 75 years? We're seeing things that we've never seen before. And when I see a guy like Mike Wilson and Morgan Stanley and people are basically shitting on him because he was predicting the market, I read his research. His research is fantastic because it's not like, hey, I think this is going to happen. This is like he provides 50 to 100 charts showing this is what happens. Look at the money slide. Look at M2. The last time this happened, it only happened last two times during the 2008 financial crisis and the Great Depression. And he's citing all this stuff that happens, but none of it happened. So is that because of the massive stimulus? Because we're talking trillions. But why are you seeing this disconnect? Because usually guys like us, where history of the market, we study and say, when this happens, the last 10 times this happens, but it's not that way right now where, things are definitely different. People say you got to worry if you think things are different because they're usually never different. Yeah.
Well, I think the big issue with regard to the home builders is that there's the generation that has come out of the basement that was living through the financial crisis, the millennials living through then COVID are like, all right, enough. And there's a discrepancy between the availability of existing homes. And the problem with existing homes is they're priced out of control. People realize they're trying to get crazy numbers on their existing homes. And I think there's a little bit of a benefit towards the new home builders, as crazy as that sounds.
They're cheaper. They're actually cheaper than existing homes. People have to come down. Why are you going to, if you get a new home, why are you going to buy existing home? I mean, you might get a little bit less square footage, but that's never happened either in history. Again, another thing that's never happened where new home sales should be higher and they're actually lower than what people want for existing homes.
So here's the problem, Frank. You have a house that's worth, it doesn't matter the number, $500,000, doesn't matter the number, $1 million, $2 million, $300,000, doesn't matter. But that's up a lot, let's say, than compared to a year ago, 2 years ago, 5 years ago, right? So you're going to move. You decide, hey, I'm going to collect my money. I'm out. I can get, a huge profit on my house. Okay, where are you going? First of all, it used to be that you could just take your profit tax-free. Well, these numbers are now not necessarily going to be tax-free. You're not going to 1031 it because it's not a commercial property or a rental property, right? So it's going to be your personal residence. So you're going to move it somewhere. You may pay taxes on that, possibly. You're going to move.
You get a $400,000 or $500,000 exemption for your
exactly, but that's not a lot compared to what it was 10 years ago.
Yeah,
$500,000 you made in the last number of years on a house. You would have $500,000 house that you bought in 2010. You made $500,000 on it.
Probably, yeah.
Okay, easy. So now you want to move. So where are you going? You're going to go to. Well, you're not going to be in the the undeveloped acreage in blah, 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 Kentucky somewhere that maybe that, if you're a city guy, right? You're not going to go necessarily to, certain areas. You're not going to go north. You're not going to go to New York you're not going back there because the prices are out of control there. So what's happened is now you're stuck. So where are you going to go? I'll make a lateral move. I'll move horizontally over that way. So,
it's a mortgage rate, though. Your mortgage
now you're going to get a mortgage rate that's going to be higher.
You had 3%, 3 point whatever to
you're at 3. Now you're going to go to 7.
7, yeah.
And now you're going to go from a tax base that slowly crept up because there's a limitation in most states, there's a limitation on how high your taxes can go. You're going to go and buy a house. Now you're going to pay, instead of 2% on the $500,000 house, you're going to go pay 2% on $1 million house. Wait a minute. How is that all going to work out? So now, unless you're moving because you have a job that needs to move and there's something that's happening, you're not going to desirously just move to move. The idea of moving up is a real problem right now. So people are sitting on their houses.
Yeah, moving.
So you'll start to see, by the way, and you'll see, and by the way, the inventory is very low. because people are like, hey, you know what? My house went up this much. It's going to keep going up. But wait till you start seeing a few different signs on the block, and all of a sudden the wait time to sell expanding. And the next guy's going to say,
I did this, Andrew. My last house in a great area in Amelia Island, and it was on the market for 9 months, and we had to lower the price probably by 15%, and I was pricing it with the market. I wasn't, some people are like, my house is worth $5 million when it's really worth $3 million or whatever, 500,000. I was like pricing in the market, but had to keep going lower and lower. And then finally, the only person, I think we had one bite and another person, all cash. All cash, you're king. That's fine, right? But just it was very difficult. And one of the negatives is, it's not really the biggest family area, and I have 2 floors upstairs, downstairs, so which eliminates, maybe the older people who like 1 floor from coming in, and not too many families and jobs. But still, it was difficult for me to sell. So you're seeing that across the board as a negative. But it's just amazing.
Anybody should go look on Zillow. Look at there's different days on market, days on how long it's been on, and see. Just take a look.
Yeah.
And once that happens, people get freaked out. They're like, wait a minute, maybe I should put my house up. And they start panicking. When that happens is they start lowering prices. And then we see this cascading effect, which is a deflationary environment for that. But again, to get back to the new homes, yes, it's much easier just to get, and how nice is it to have a new home, that new home smell and new closets and everything's working, and you don't have this leak all of a sudden.
For like 2 months, 3 months.
Yeah, for 2 months you get everything working. But you know what I'm saying, right? But you don't have to replace. You don't have to worry about replacing the roof for another 10 years or something like that. And the appliances, you don't all of a sudden anything can break. But you know what I'm saying, from old age, so there's a different kind of vibe going on with that, and a lot of people want to do that. Plus, they want to be in a new community, right, where it's all brand new, and a lot of these communities are, you have all these different things like, hey, pickleball and pool and club and all this stuff that people want to have now. It's more of a lifestyle thing. Some of these existing homes that you'll have are just like neighborhoods, right? There's no facilities. There's no amenities.
Yep. No, it's true. It's true. So
I still don't. And by the way, I still don't understand it. Just to let you know how, in fact, they're doing so well, these home builders, even though I said all that.
I mean, the incentives they provide are much better. It's nice when you have new homes that are selling for the same price as existing homes. So again, a little bit less square footage. That makes it easier because people are definitely going to buy the new home compared to the existing home with much more problems. And plus 2007, 8, 9, 10, I really covered the home builders. And these guys learned a lot, kind of like the technology companies during the tech boom, right? The .com boom, where there's a reason why their balance sheets are so strong. They don't get very, very aggressive, right? They don't get super aggressive at the wrong times because they almost went out of business. The home builders were close to going out of business. If it wasn't for bailouts, where they were able to carry those losses, I think up to 5 years instead of 2 years. So the next 3 years, once they flooded the money with the market with cash, into the banks in 2008 in the credit crisis, in 2009, at the end of that year in 2010, 11, those guys were making massive profits. They rebounded tremendously. So going through that, I think they learned a lot, and also providing incentives where you might be able to lower your mortgage rate and provide their own loans to get help. But I don't know how that could continue, but that's just one area. I mean, let's talk about, banks are on fire. This is, personal
cruise lines. What about cruise lines?
I mean, they've never seen business this good ever. Cruise lines. There's a reason for that. They
were bailed out too.
Yeah.
They were out of business. I was in my boat. I was fishing during COVID because what could you do during COVID, right? Couldn't do anything. So I'd go out and we'd go out and we'd, stay distance on my boat, but we'd go fishing. And I was telling stories that there was all these cruise ships just out there. And we get pretty close. We see all the crew, begging to talk to somebody because they were just bored out of their minds. But they were bailed out dramatically. Royal Caribbean, I think, had an all-time high last week or 2 weeks ago, whatever it was. Amazing. I was always like, the debt load is going to kill them. How are they going to come back from this? They
restructured their debt tremendously, which is great. And they came back for it because look at their competition. I mean, you know how much it costs? It costs probably about $12,000 to bring a family of 4 to Disney right now. Yep. I mean, it's outrageous. Where you can get like all-star, first class, whatever you call it, service on a cruise for probably 20% cheaper than it is, especially with these hotels, where all the hotels you go to now in the major areas, you could pay an Expedia wherever you want. As soon as you walk in, they're like, oh, it's $75 extra a night. It's $50 extra a night as an add-on fee. I mean, so now people are seeing these fees. Now I think Airbnb, I'm staying in Airbnbs a lot more, which is better. But just the whole travel industry, and then going to the banks too, which, I get a little pissed off at this because, I know that they're pushing for more regulation when you have, Elizabeth Warren, and believe it or not, it's a big banks that are lobbying for that, because the more regulation makes that moat just literally impossiple, right, to penetrate.
Right.
You can't. So you have these 4 banks, the strongest they've ever been in history, massive hundreds of, over 100 billion in sales, another 30-40 billion in profits just off the quarter. These guys are just positioned so well and so strong right now based on the current laws. And there's no one that could penetrate that market. If you do, you become New York Community Bank, which surpassed 100 billion in assets under management, and put them in a certain class, required more capital ratios, and the stock crashed because of it.
That was just dumb. That was just dumb.
It's amazing. So it makes you think, and I've been saying this for many years, make sure you have at least one of those 4 largest banks in your portfolio. They're going to pay dividends. As soon as they pass a stress test, what happened? They announced massive dividends, massive buybacks. It's going to continue year after year. These guys are just full of cash.
Well, one great investor once said, we probably have said this before, but if reincarnation is true, I want to come back as a bank. Banks, the Fed was created to save and to make sure the banks were always here. So, banks are in great shape. Look what happened with the regionals recently. The regionals, that big part of the small cap index. We talk about a resurgence out of nowhere, just like July. The first few weeks of July, 10% in, I think, 6 days. Yeah. The small cap market. But most of the small cap market is the financials and energy stocks. There's other ones.
While the market was relatively flat, right? It was only 1%. So it outperformed by its large amount in the history over that 5-day stretch, right? And we see a little bit of pullback in overall markets, but still that outperformance is amazing.
Here's my theory. You want my theory on this?
Yeah, go ahead. I want to hear it.
All right. So this goes into the discussion of the housing market that we just talked about. So the housing market during COVID, it was unbelievably interesting what happened, right? We had all these really expensive houses in New York, New Jersey, Connecticut, wherever, right? And people looking down at Florida saying, Tennessee, Texas, saying, let me get this straight. I can buy a house, the same square footage or larger, maybe on the water, in a very desirable area, good weather, for half the price that I paid for this house here, or that I can get for this house. They sold that house, massive amount of money, and said, you know what? I'm going to sell this house for $1 million. This house that I could buy down here is beautiful for $500,000 on the water in this beautiful area, great weather, no taxes. It's going for $500,000. I'll bid it to 600, right? And what happened was, what was fascinating, this excess money that they just utilized by selling, they could just easily just pour it into there, and it just pushed the prices up dramatically in Florida. And now that's affecting us in a lot of different ways, right? The whole inflation environment that's going on here, and just as expensive right now, Fort Lauderdale, most of Palm Beach, South Florida, just as expensive as pretty much anywhere else in the country.
It's insane right now, yeah.
That's what happened last week or so. So there was trimming going on of NVIDIA, Microsoft, Apple, pick your poison, whatever it is. But when we say trimming, just a little.
Yeah, they'll say it's like, they'll say $1 trillion valuation, even though they're up like,
But where did that money go? But they have to be invested, these funds.
That's a good point.
So what do?
They want to get fees, they have to be invested.
Right. Yep. They take this trimmings, the junk that fell off, and they put it into the small caps. They look for a reversion to the mean. They look for an alternative investment that has been the differential between the returns of large mega caps and small caps has been severe, right? So what they do is they put it there, but there's not enough. So what happened here, they bulged the market. So I think what happened was the selling that took place to take profits on the things in these mega caps, there was so much money that they're like, just buy it at any price. I think that's what's going on with small caps.
Yeah, and it's interesting because, someone who's followed small caps my whole career, basically for 30 years, it's
that was your first newsletter, wasn't it?
The reason, yeah, small cap. So the reason behind it is that they say is, well, they're going to lower interest rates. Well, that's actually much better for large companies, right? Because you're probably going to see the dollar decline, and it's better for profits overseas. Yes, so it's not necessarily like you have all these risk assets because rates were low. Even when rates are low, large caps significantly outperform small caps, right? So yeah, just the reasoning is something that, hey, let's find a sector that has been really depressed. But I think even looking at the Russell 2000, it's a horrible gauge. It's worse than the Dow Jones as a gauge for the market because that's price weighted. The Russell is not a good gauge for small. First of all, you look at 40% are not even profitable. And also it only rebalances once a year, meaning that super micro is in there at, I think, at $90 a share, and it went to what was it?
900
to 1,000, right? So,
yeah,
so the market cap
1,000.
was something like 50, 60 billion or whatever it was, something like that. And it remains in that index the whole time. And even a company that has a $500 million market cap could go down to a $30 million market cap, and it's going to stay in that index the whole entire year. So I will look at small caps not as the Russell. I would actually look at, I'm finding lots of ideas, like you said, in banking, in energy, in biotech, which has been annihilated. And so many funds are so leveraged. Man, there's so much forced selling that, when you look at the demographics, even for all, especially biotech, where, listen, we're getting age, right? People getting older. We're seeing AI, especially integrated with that, with biotech, is amazing. They get more discovery from drugs a lot quicker, a lot cheaper. It's not going to take, whatever it is, 12, 13 years for a drug to come to market, which costs over $1 billion, or it's $1.5 billion. So you're going to see all these things where biotech right now, I'm seeing lots of opportunities. But let me ask you this. We saw a lot of news in the past week and a half, okay, starting on a political front. And we look at what happened with Trump. So again, assassination attempt didn't work out. And now you see him almost, right now, the odds of him becoming the next president are very, very high. Right now, you saw just right now, Biden drops out, which was kind of expected or whatever. Now, not to get political, what you believe, we can have fun with this conversation, but does this change the landscape of anything, of how you're going to invest going forward? Because it seems like the market has been adjusting a little bit, especially when it comes to crypto. Right. The first pro-crypto president, he wasn't pro-crypto in the past, but he is now, and clearly getting massive donations from the biggest, Horowitz.
But which came first?
So regardless, he's speaking at the Bitcoin conference, right, this week.
$820,000 top ticket price.
Yeah,
for
dinner or something, right?
For dinner,
and he's going to get that. I mean, he's going to get that pretty easily with that crew there. But now, I mean, do you see a change? Because now it seems like, okay, he's likely going to become the president. We don't even know who's running yet for the other side. Is there a change in, say, energy, right? More drilling or natural gas, less on climate change, solar energy? Right. Is there anything that you're looking at that could change? Or is it hey, just buy good companies?
So I think there's two sides of this whole thing, right? There's with Trump, we'll just stay on that for a second. I think there's, benefits and detractions, right? So the whole thing is that we talk about the energy complex, right? So, okay, less regulations, more drilling, that help out the companies, or does that hurt the companies, right? In theory, we have more oil prices go down. So that doesn't really help certain companies, but others. You got to be very specific of where you're talking about, right? You look at maybe the banking, less or potentially banking, even the healthcare or biotech. Yeah, less regulations, less lead time, less red tape from a governmental standpoint. So there's definitely things that will benefit. There probably are things that are problems too. What's going to happen with the China trade? What's going to happen with Taiwan? What's going to happen with, Vance is a very much, made in the USA, but also protect the USA, screw everybody else. I don't mean that everybody else, but, kind of like that's their problem, not so much our problem. And Trump does oftentimes listen to the people around him, right? His ideas are the people around him ideas. So that may permeate some of the foreign policies. There's a lot of very interesting things that could happen, may happen. Is there a lot more upside in tech with Trump? Maybe. Again, with regulatory environment, possibly with patent issues and things of that nature. U.S. built in the USA, back a big issue also on that. Tariffs, talking about 60 to 100% tariffs on Chinese goods, attacking that whole China. Because you know what? China's an easy punching bag during a political environment. But again, there's a lot of things that are there. NVIDIA made a big announcement. They're changing their chips to be appropriate, which is a big scam, right? They'll just to sell to China. To make it legal to sell to China. Biden was talking about more issues with chips and importing and what can go where and what can go into what deals. And does it change my thinking? I will tell you that what I'm feeling and seeing right now and what I think is going to happen is a lot more emotions. Once again, we're in that 4-year cycle. And there's emotions. What team am I on, and what do I think they're going to do? And I'm going to invest emotionally with that without regarding facts. And I think that's something that we're starting to see. There's a lot of push and pull going on. Is it going to be good for this company, bad for that company? Is it going to be good for oil commodities? Is it going to be good for a regulatory environment, et cetera? how's our foreign policy going to be? What's going to happen with EM versus, developed Europe? I mean, Europe's not totally thrilled when they saw, Trump, the assassination attempt. The Europe markets were not thrilled about that, right? They're not. Right. Yeah. They're not happy about Trump coming in. He's very disruptive, for good or for bad. And so, switching over to the other side of the unknown, Harris, maybe, and we don't even know a VP selection on that one.
Yeah,
and we don't know what her. So if Biden was in, we knew pretty much his policy. Do we say
you got to figure? Kamala's, it's the same, right? I mean, it's the same policies under her, same exact thing, right? I mean, that's what you have to assume, Democrat, Republican, that's it's the same policy with her.
I'm not a big fan of investing because of the political figure inside of that government. I'm more concerned about the actual things that happen. Pushback on EVs, weird. Musk is now supporting Trump, even though Trump didn't invite him to all those meetings. Maybe he's saying, you know what? I figured this out, Trump, Musk, give him money and I'll be in his favor. Maybe that's what is going on with that $45 million monthly deposit that he's making.
And not only that, he's gathering a lot of big heavyweights, right? And Silicon Valley, which is surprising, is starting to support him as well, which is smart, right? I mean, you don't want to go down with a sinking ship, and maybe they're able to turn this around, but if you see someone's a clear winner, you want to be donating to that party, right? You want to be a friend of that party, because that party, again, when it comes to politics and they can make your life a living hell, right? Especially if you look at the EPA and what they could basically shut down any company they want without any facts, right? And I've seen that done with mining companies. So yeah, it makes sense where you're going to see, like, everyone's surprised that, wow, Silicon Valley is now supporting Trump. They're not necessarily supporting him because they like him. If he's going to win, they're going to have no choice. You want to be his friend, right?
Sure.
They're not be his friend. It just makes sense from a political standpoint.
Well, but look at some of the people coming back. Did you see Mike Pompeo? Did you see him on the RNC?
Yep.
Did you recognize him at first?
No.
I was like, who's that guy?
No.
I'm like, why does he say Mike Pompeo on the bottom? He lost like incredible amounts of weight. Seriously. He's like totally, I mean, emaciated. Well, for Mike Pompeo.
Yep.
I was like, that's not Mike Pompeo. It's not him. But didn't he have a falling out in the end with Trump?
Yeah. I mean, so did
several people.
So did Vance. Vance was calling him Hitler and everything. Again, it's all politics, right? I mean, these guys don't care. They just want to get elected and stuff. So
that's the point.
I think Trump. The best thing with Trump right now is, even before his speech at the convention, I just thought his speech wasn't as great as it could have been. And for Trump, if I was him, I would do what Biden did. If you lock yourself in a basement, you're guaranteed to win. The only thing that get him in trouble is his mouth, right? So he starts saying climate change is fraud, and whether you believe that or not, you're separating people, right? At a time when you could easily, during that event and what happened, you basically attempt assassination, it's easy to unite people, right? I've seen that firsthand during September 11th. You wouldn't believe how it was down there a couple of days later, which I was able to get.
Right, Rudy, just think about Rudy Giuliani
and Bush, but it was just the people like just coming from every state, even other countries, to help out. I mean, there was just so much love there. It was just amazing unity. It was just, it's when you see something like that happen, it's a chance to basically unify. And I just think if he keeps his mouth shut, he's fine. But we know Trump is not going to keep.
Well, that's not going to happen. That's not happening.
It should get interesting. But let's get back to stocks here too, because we've seen a sell-off in some of these large caps, and every time we see it, everyone you gets worried. Everyone gets worried. You got to watch out. NVIDIA finally selling, and 100% of the time, 100% of the time, it results in a buying opportunity, because these companies, when you're looking at an NVIDIA, this isn't the .com era where this is going to happen. This is happening. Okay, you're looking at $24 billion in sales in a quarter. They're spending. It's not like, it's not like AMD. We're going to be an AI play. No, NVIDIA is an AI play. So, is it a chance to buy some of these names on a pullback? Do you wait because you're mostly with technicals, and I understand, some things have been broken, and I know NVIDIA held its 50-day recently, but are you looking for more confirmation? Are you looking to buy these things on a dip? Because almost every single time these things pull back, people get nervous buying the dip.
Well, here's the thing that's a little bit concerning. This is the second time we saw a massive break in the last month or so. So I think people are getting a little bit concerned. We have earnings coming up over the next 2-3 weeks on this. NVIDIA is a little bit longer out. We hold NVIDIA, Microsoft, Google. It's fascinating when you watch like an Apple, right, which had a okay earnings report at best. but a $110 billion buyback gets you plenty of runway.
It's not even that much of a percentage of float. To me, I liked Apple, and we were able to really bottom tick that. And I've been wrong on other things before, but when you look at Apple really controls the world. I mean, if they basically, just because they changed their privacy policy, they push Microsoft stock down 25%, right? I mean, not Microsoft, Meta stock 25%, down 25%. But how do you view everything through their apps, right? So imagine they were like, hey, Facebook and Meta, you're no longer on the iPhone. What would happen to that stock, right? Yeah. So, and now that they have all the pictures, now that they have all of your videos that you're going to be able to talk to it and say, do this and change this picture and do this, send it with AI capabilities. I see where they're going, and now the upgrade cycle where it's the first time I've seen Apple have, and again, I'm in the phone business so well. I own the store for like 7-8 years. By accident.
I thought you got rid of that.
No, I still own it. I may look to get rid of it. I just don't have the time to manage it. So it's just kind of like the side thing. I have other kids managing it. But anyway, you never really needed to upgrade an Apple phone for like, probably 5-6 years. Right. And now there's a need to, because the 15 and the 16 are going to include AI capabilities, which is going to force this massive upgrade cycle, which is usually 8 to 10%, maybe 12%. Now you're going to see 20%. So I see where Apple's going. I see where that stock's going up. But others, like Tesla, which, we traded very, very well. But, I said, wow, this thing is really getting out of hand, how high it is. And now it's pulled back. But there is a difference in a lot of these names, right?
A big difference in a lot of these names. I mean, Microsoft has, this is gold rush. If you just take the gold rush and you superimpose it on what's going on, I think that's what is a reasonable way to look at what's going on right now. Mm-hmm. Gold rush was, people went out there, everybody's got crazy, and they all just, got in their wagons and they went. They didn't know exactly what they need, but they knew they would need shovels. They knew they need Levi's. They knew they need something to sleep in. They know they're going to need pans, for a pan of gold, all this stuff. So NVIDIA's picks and shovels, right? Mm-hmm. And that's it. So it didn't matter if a company gets it right with their AI. It doesn't matter if you and I were out there and we're doing our thing. We got our whiskey bottles. We're drinking that. We got our Levi's on, and you and I are shoveling our stuff and panning for gold, and we don't get any gold. But you know what? We bought all the stuff, and we'll continue to do it because we think we're going to get there. Mm-hmm. So some of the companies that are being sponsored or created to have something, I'm not naming any particular names, I'm saying in general, right? Everybody's on the bandwagon. That's the point. Mm-hmm. Not everybody's going to have an AI that's going to be generating. It may be generative AI, but it may not be generative profits of AI, right? So, but they're still going to be buying all these goodies to make it happen. Now, again, it may fail and they may close it down or whatever. Look at what some of the fascinating things that have happened, though. Why is this all happening? Why is Microsoft doing so well? Well, Microsoft basically took money off of their balance sheet. They gave it out to companies that are in the AI business. They may have taken little pieces of it, but basically said, hey, here's the deal. I'm going to give you $1 billion. But you know what? You got to come and do your AI gig and utilize Azure for the next 3 years and pay us. They took money off their balance sheet and converted it into income. Mm-hmm. Could you imagine going to your bank account, paying yourself, or giving it to me? You go to me, you give me $100,000, Frank, and you say, I'm giving you $100,000. I go, okay, what for? Well, to invest for me, but I want you to give me back and you somehow I turn that 100,000.
So now they're making money off of the value of like an open AI increasing in value. They're also getting money from the cloud, which is great.
That's great.
It's a great point.
But that's what they're trying to do. They basically took their balance sheet and they converted it to income, which is like, well, that's better than buybacks. That's better than $110 billion buyback because it flows into your earnings numbers every quarter.
Speaking of earnings, we always have this conversation before we get to some ideas. Have you noticed, because again, something that's happened that's never happened in the past is we see stocks pretty much near all-time highs before this 5% pullback. Yet we're seeing the large technology companies lay off lots of workers. When you lay off lots of workers, you can see earnings go higher, but usually you see sales, stagnant, come down. Sales are going higher. Earnings are going higher. Margins are getting better. You're seeing this trend, and it's probably AI related, where productivity is starting to surge with fewer employees needed. And it's resulting in this earnings surge that earnings are expected to grow 12% this year and
12%.
8% next year. I mean, on average, we could probably see 5-6% over the past couple of years. That's massive growth that we're expecting. And do you see that happening? We always talk about this, and we're always off because every time you say no, there's no way these companies going to generate earnings. They find ways to generate earnings, right? It's just
incredible. But you said something. I'm going to pull you from what we were talking about with the small caps. You said the Russell 2000 is a terrible metric for markets. Why? Well, because it's a market cap weighted. So remember something, the 12% earnings growth is on the S&P 500, which is a market cap weighted. By the way, last week's big move we were at 39,000 something on the Dow, and it kind of like went straight up. Remember? Remember that? It went straight up. You know why that was?
United Health.
United Health. United Health was over 550 points of that move. And because it's price weighted, you don't think somebody's doing a little finagling with all these numbers. You don't think that the computers are designed to buy all the massively big companies, the Mag 7 or 10, let's call the 10 largest stocks in the S&P 500, which I think are like, I don't know, 25% or so of the S&P 500.
You can't outperform unless you have those stocks. There's no way you're outperforming unless you have and you can see it through all the top hedge fund managers.
But that's your earnings. That's your earnings. If you have big growth, I think some unbelievably ridiculous number of the earnings growth of NVIDIA, of the S&P 500, forget the NASDAQ for a second, but the S&P 500 over the last like 1 year has been like NVIDIA.
Yeah.
It's been.
And now you're looking at a lot of catch up where, not so much Apple has been a lagger, but you're looking at, and so is Tesla, but you're looking at Meta's growth is incredible. And so is Alphabet, 30% growth they're expecting. So you're going to see, you're right. You do see it heavily weighted towards some of these bigger companies.
So you'll get that, but you may not get this. So the point is, you're going to get this growth. I think that's built into the discussion from all these companies, and particularly Microsoft, if they can continue doing what they're doing and maybe not get hung up on this whole CrowdStrike thing, because they were part of this whole gig. There was actually some underlying stuff with Microsoft still being a problem. CrowdStrike still down another day, down 30% in the last few days, which leads to a whole discussion, by the way, the dominance of single companies in the whole tech stack.
How can't that? I mean, that company even now is trading at 70 times so what earnings. They're going to lose some of their customers. Big fines are coming.
Of course.
And they still haven't figured it out. I know because I flew that week. I got lucky. I got home with just an hour and a half delay, and I flew home on Saturday. For vacation with my family, but I could tell you, I'm still getting texts right now saying my flight was canceled.
No,
from 2 days ago. I'm here, right? I'm back, and they're like, your flight's canceled. If you need to change it, I'm still getting. So it's still within the systems. I don't know if that's Delta specific, but
I mean, some of the financials. I personally shorted Netflix. Early morning, Friday morning. Didn't get a confirm.
Oh, really?
Wow. I was 30 points in the money. 30 points.
Yeah.
I'm like, all right.
If that would have went through, you wouldn't have worked out, right?
Of course. Of course. But I'm saying, I'm like, it still says pending. Why does it still say pending? I don't understand.
That's interesting.
I call up like, well, so I trade a few other things that all worked, but Netflix never went through. Then all weekend it said pending. So I canceled it before the day was over. I'm like, I don't know what's going on with this thing.
Yeah.
Still said pending. Sunday said pending. This morning I wake up, it's like canceled. I'm like, that was 30 points.
Yeah.
30 points was a nice trade.
Yeah.
Oh, well.
No, it's crazy. Into earnings were decent. They got the ad platform, which is that's going to get rampant probably in about 12
I don't know.
months.
Have you been watching Hulu on the ads? It's so freaking annoying.
Terrible. Well, Hulu's a horrible platform, right? I mean, Hulu's always been Hulu's the longest running streaming platform, and it still hasn't made money in like 16 years, I think, 17. It just shows you how bad streaming is.
We bought it. We finally caved into not just using a random email for the 1 month trial. Talking about it. And we bought it, and we did. I said, okay, whatever, I'll do whatever. I said to my wife, I want to watch The Bear. I watched The Bear, and which was terrible. The third season, by the way, terrible. I was so disappointed. But it was like every 5 minutes, it's like another commercial.
Yeah.
And you can't skip it. You can't record it. You can't. We've gone from, oh my God, how terrible TV is with commercials to, oh, how great it is now. It's like, wait, I thought the whole point was it was terrible.
Yeah. So. No, it's just, I mean, I have YouTube and they just, the commercials are crazy. Like they try to feed you commercials, I guess, because they know everything that they're tracking you and everything, but it's just, it's all over the place. It's kind of crazy, but with streaming. So let's get to some ideas here. So what are you looking at right now over the next, again, there's so much uncertainty, right? Where you're seeing good news, which is really bad news on the economic front because it shows the economy slowing. You have this CrowdStrike thing. You have earnings season in full play right now. Banks just came out, reported good numbers. The economy's doing okay. Earnings growth's expected. So How are you playing this market with individual ideas? You're looking for small cap ideas? Are you focusing on larger names? Where are you going?
So I'll give you three different ideas. One's a general idea. We'll just stay the banks, generally speaking. I think two reasons. If Trump is going to win, that's something that's going to be perceived lower regulatory environment, less like regulations in the environment, which would be great for the banking industry. They talk about, getting away from some of the high, incredibly difficult levels of like the Basel rules and all that stuff that's gone on. Mean reversion trade, I think there's going to be, even though if earnings come out and they're good, there's only so much we could see 40% increases quarter after quarter after quarter, even for NVIDIA, by the way. Okay, it's just there's a limitation. But I think there's going to be, with the Fed, with the yield curve steepening, with the Fed perceived to be loosening, I think banks and regionals could be a good play. So yeah, small caps are something. I like EM too, but that's another whole discussion. I think if Trump gets in, the dollar will come down in value. It won't be as strong for a variety of different reasons. Couple other things, restaurants. So I think this generation that we have here, and even many of us are accustomed to actually going out to eat, is much easier, even though we just talked about how expensive it is to go out to dinner.
DoorDash is on fire. I can't tell you how many people use DoorDash. Holy cow, how many people use DoorDash. I never thought that.
Or any of those, or even the Uber Eats or whatever it is. But I ordered Uber Eats. I got a protein shake. Right, one day I'm like, let's get the protein shake for lunch. Just
did the guy take a sip of it or?
No, it was like a $12 shake, and I pushed the button to confirm. I'm like, wait, how's it $24?
Yeah.
I don't understand what just happened.
My daughter's, again, the young generation's into that. I'm like, no more Instacart, no more nothing. Everything's 25, 30% more. I'm like, just tell my wife, drive, just go.
Yeah. So, but that's it. So it's also the restaurant. So I'll tell you something. I had friends that have COVID, and what I do every single time a friend has COVID or something like that, I make a big thing of chicken noodle soup for them. I went to the store and I got the chicken, I got the stuff, I got the onions. I get to the thing, I'm like, wait, how is it $83 if I'm making it? I could buy them a chicken soup for like $8 somewhere, right?
You make them a big soup, and you. If people don't know this, we interview a lot on each other's podcasts and Disciplined Investor, and he, you post all the time. You're basically a chef and something. You make this whole. Because I'm gonna have COVID next week, just to let you know. So.
I make probably
around
noodle
Tuesday,
soup.
Wednesday when my wife's not cooking. Wednesday, I make
a fresh chicken noodle. I do like a roasted chicken noodle soup. I made like 3 quarts of it for them. I figured they'll be in for a few days. I could eat that. So, but it was $83. And now let's take off 15, or let's take off 20, $63. I bought some waters. I bought some other stuff, $63. I'm like, are you kidding me? I was shocked. And this is not at some fancy store. It's at the store that I get all my good produce from and stuff like that. But it's a cheap store. It is a very cheap store. It just has good stuff. So, but the point is that going out to eat is still, even to some degree, at a reasonably priced restaurant, convenient. Most people don't know how to cook anymore because you can just push a button and grab it, come home. So I like a company called Toast. I don't know if we've talked about this before.
You did. You gave that company away. I think you were on maybe a couple months ago, and it rocketed higher. It really did really well. So I
think Toast is really great. Yeah, the employees love it. The staff loves it because they get their own log. First of all, it's easier to do a point of sale right at the table and deal with it right there. It comes up with, quick, 18%, whatever it is, you sign, you're done with it. You don't have to think. You don't have to like sit there with, all right, it's a $100 bill. And half of the $100 is going to be okay. So if 100, it's going to do 15%. So I got to do 10. That's $10. Then half of the 10 is 5. That's 15. So 50, I want to go 18. It's like more like 3. I got sit there the whole time. Then then I got to add it all down and figure out if it's right and take. This is just click, 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 sign, I'm done, right? It's great for the customer, great for the table turnover. Then it also has a back-end stuff that does for the management. It has integrates so that the employees know where their tips are, what they have, what's going on. Great system overall. TOST, I think, is great technology. It's only getting better, by the way. Efficiency for restaurants. If prices are going up and restaurants are looking for places where they can save money, well, it's a definite higher cost to install something like this, but the long-term efficiency for the restaurant from the back end to front end, great. So it's a good way to actually long-term cut and manage costs. So I think that's one. One thing we didn't talk about, if Trump does get in, there's an area that we didn't talk about at all, which should be on everybody's mind, which is defense. Defense spending.
True.
He would like nothing better but to get into a big tank and drive it around. right? I mean, seriously, right? He wants to do that kind of thing. He likes, I'm not comparing him to the dictators, but you know what I'm talking about, that walk out their missiles and do their army thing and show their strength. That's a Trump thing, that he'll do that. But, you know, where do we have defense issues? Well, we know the Lockheed Martin, the companies, I used to put Boeing in this, but Boeing's in a different discussion right now. We put all these companies in there. We know those companies, right? What about the other side, the smart technology, the smart AI defense related? What company is that? Took me a long time to warm up to this company, by the way. Palantir. Palantir, Alex Karp with the crazy hairdo. I was got evil genius, but the crazy genius.
Yeah. Listen to one of his conference calls. That guy doesn't hold back. He's pretty crazy.
Yeah, he's pretty crazy. So, but this is protection. This is AI for warfare that they develop. They have more data points and more information on things and stuff, seriously, that can help with leading edge offensive/defensive. They also have the drones and things. It's unbelievable what they have.
AI is such a major factor with defense. I just went to Army War College, right? So it was a national security seminar. And you have a special invite that I went there and they were talking about this. And even they, like, AI was a big topic there, but just the AI capabilities of making decisions where it's going to be able to, like, if you know a terrorist is going to be at a certain spot and you want to figure out when's the best time to actually take them out. And it's a big thing because, there's a lot of innocent people, right? There's collateral damage.
Sure.
I mean, it takes a while where a fraction of a second through AI could show you the outcome and tell you exactly, listen, do it this time, right? It's the capability of AI within defense is really incredible. And you're onto something there. It's not just Palantir. There's other names I think are great.
Right, but they happen to be one of them that's out there. They got some good contracts recently. They still have a long way to go, this company, which I think is fascinating because they were really front and center, and I got, again, great technology. I have people also in the industry that know what they're doing, and not from a sharing secrets with me, but just know the levels of what's going on, and it's pretty impressive. And a lot of the stuff they do is quiet.
Yeah, I mean, I've had a company on my portfolio for a long, long time. Worked tremendously on is Air Environment, AVAV.
Oh yeah,
which is another company, just drone supplier. But I will push back a little bit on this because under Trump, we didn't have any wars, and he's talking about immediately on day one we're going to get out of the Ukraine war. So if you see that, could that result in less spending for defense companies? Because I know that's one of the things, Ukraine and Russia's driven AVAV. You've seen Palantir, a lot of these companies where obviously Israel, Palestine, and stuff like that. But if we're really going to have no wars of what he's pitching, again saying that.
Well, I think no wars from a bow and arrow, musket. And all that. I'm talking about also what Palantir has is cyber warfare, cyber protection. They have all that going on too. So I just think that there's a lot to be said about that whole environment, especially now that we're looking at CrowdStrike, and what happened there, and the other companies that had Snowflake had a big problem. And we're getting like AT&T with the major breach. Nobody seems to care about this, by the way. Is it only me that cares about the fact that there's all these breaches and pretty much every piece of your information, not to mention messages and God knows what else, went with the AT&T? Does nobody else care? Nobody cares about this.
Why you shouldn't care is because every technology company has it already. That's why you shouldn't care. They have everything. And I could tell you, if you don't think so, I'm going to tell you this. And you could even go, the last Apple update, right? Apple's always like, oh, we're great. We're, privacy and stuff like that. They just triggered something that automatically they journal entries. So journal entries are shared with everybody all of a sudden. And it's the default of the new update. And I tell everyone to get your phone, go into settings, go into the journal part, go into securities and privacy. And you're going to see it, and it's green, where you're like, "Holy cow, I never checked that." So basically,
wait. What's the journal? You're talking about the journaling of
almost anything that you put on your phone. Yes, I mean, if you can go in, I'm doing it right now. So if you go to settings and you go,
let's get the old geezers going here. Okay,
yeah. So you go
settings,
into privacy and security.
Oh, a second, cancel. Okay, settings. Okay.
Privacy, security. Then go journaling suggestions.
Under J. Is that a J?
Yeah. Journaling suggestions.
Okay.
And it says discoverable by others.
Yeah, what does that mean?
Is that
It's
green?
green.
Is that
Yeah.
it's green for everyone right now, right? You didn't
What
know
does it
that.
mean?
There's a new update. So
Allow
basically, what it
others?
means.
Hold on a
Others
second, I got-
detect you and
Yeah,
nearby
yeah,
help
both of us.
prioritize.
Look at us. Look at us.
There's suggestion. We're so old. We are so old. For those of you not watching and listening, we both put on our glasses at the same time. But it says
Others to detect you're nearby to help prioritize their suggestions.
Yeah, that's true.
Who are others? Who are others?
Yeah. I wonder who. I tell you what, you want to have some fun. And next time you go onto the website, everyone does it. Nobody cares, right? It says, we updated our privacy policies, and everyone just clicks anywhere on the page, which means you accepted it. I want you to take the time and take 5 minutes out of your day and skim through that and see what that says. You will be floored when it tells you that everything that we have, everything that you put on this site, we're going to give to everyone in the world, basically. And that, you know why? Because
That's
AI,
the AI
capabilities.
AI, that's the AI, that's the large language models.
Yeah. So basically, if you had, your name is worth maybe 50 cents to $2 to $5, sometimes $25, depending on how much information they get. Say if I want a newsletter subscriber that's buying, stocks in my portfolio and they're going to be interested, I'm going to pay more money for that lead. With AI, now that lead is worth $25 to $50. It could be worth $100 because you're going to know every single thing on that person and be able to pretty much through inference, figure out what they're going to do the next minute, the next hour, the next day for the rest of their lives. Right. So that now there's that's why if you look at Reddit is the shittiest company. It's the only internet company in the world that I've seen in 20 years that hasn't generated profit, right? In 20 years, through all the cycles in 20 years, they haven't done it. Now their stock's going higher. Why? Because they have all these names. They're taking all the data and just giving it to everyone through AI, and people pay a fortune for that. So having a list is much more valuable today than it ever was. But the private policies, man, just be careful. I mean, even Apple, right? Apple supposedly like, we're the best. So
but nobody cares. Nobody cares. They for years we puked this information into Facebook. Cares. Right? Everybody's like, hey, look what I'm doing. And I still have friends that
the funniest thing is people get pissed off at it.
They
get
record everything they do every day.
Yeah, everything they do. Listen, I'm right here. I'm checking in right here at this second. And look, and on vacation right here. Look with my family. And here's the pictures.
Or there's something that happens like 3,000 miles away. I'm safe. I'm safe. I'm like, safe. What do you mean? It was in Indonesia. There was an earthquake in Indonesia. You know you're in Florida.
Yeah, you can't post on these social media sites and get pissed off that they're stealing your information, especially when you're giving your whole life away to them, right? It just doesn't make sense. Yeah. But all right, so we covered so many different things and so many ideas. Love having you on the podcast. So you actually run money, right?
Yep.
And tell people all about it, Anderson Horowitz, because you do have the Disciplined Investor podcast, which a lot of people are familiar with. So tell them about.
You can go over to the disciplinedinvestor.com. We have 3 different strategies. 2 are a little similar. One is like a global allocations, which is a $500,000 minimum. But we also created a junior version of that. Called Investology, which is starts at about $10,000 for anybody. Pretty much affordable for anybody. It's a global allocation. It's not an individual stock. It's more, we're looking at where your risk is, where your time horizon is, what we want to do, where we want to be right now. We want to overweight EM, emerging markets. We want to underweight fixed income, depending on what your risk is. We want to be, more value, more growth. I mean, we move things around, right? So we moved into commodities from gold and silver, and that was a few months ago, up really nicely in that because oil. We did it because we wanted more oil in the portfolio. It was at 72 at the time. Now it's at, 81 or something like that. Then we have our global allocations, and then we have our managed growth strategy, individual names, the ones I talk about. By the way, full disclosure, Toast, Palantir, and banks are in that strategy. Mm-hmm. We go long, we go short, staying away from the short positioning because the short positions can be a day, and then they just go back up.
Yeah.
So it's impossible right now when there's so much money seemingly chasing things from whether it's sovereign wealth funds or stimulus or everybody just saying, stocks always just go up over time. And like you said, when they correct for 5%, then
the Tesla went from 140 to 250. I loved it at 140 because expectations was so horrible and everybody hated it. Usually that's what Elon Musk shines. But then it went to 250 when they're lowering prices. Their production is going down. China's horrible. Production's down 6%. They beat the numbers. It's down 6% over year, down 6% year over year. So you see the numbers decline, margins decline because they're cutting prices, and it stocks up. So if you can't make money on something like that when Tesla goes to 220, 230, goes all the way to 250, 260, it's very hard. Shorting is a tough. Is tough
right now. There'll be a time.
Yeah.
Oftentimes that happens. You get faked out.
Mm-hmm.
Like I said, I shorted the home builders for like 2 days. I'm like, you know what? I'm not doing this. It doesn't feel right. It doesn't look right.
Mm-hmm. No, it definitely makes sense.
Right now, you got to be more patient. Everybody's still thinking. I think again, the big picture is there's always these narratives. And by the way, just to finish this one point up that we talked about, why are people buying right now? The Fed has done a great job of holding a carrot in front of all of our noses, convincing us all that a lower interest rate is really good for, for the markets, right? They keep on going back and forth. How many times have you seen this guy say, you know what, we think we got our goals, but we don't want to go too fast.
Yeah.
Like, seriously. Like, somebody comes out, cash carry, you know what, we may have to raise rates. Somebody else the next day, you know what, we may have to lower rates. What? The Fed comes out with a harsh statement. Markets don't like it very much. 2 days later, they're like, well, you know what, things are much better now. Like, they've been masterful.
It's hard when you have the government that's going to be there to bail out.
Right.
And I say this all the time to end this way. I mean, the worst thing that ever happened when it comes to our government is the credit crisis. They made money on everything they bailed out. So you knew they were going to go
Maiden lane.
They just didn't bail out during COVID. I understand that. Everybody understands you locked down. Nobody knew the extent of it. And then we did know the extent. You know when the extent? By the end of 2020, when every single asset price was at all-time highs. And
there was no need for further
$3,
stimulus.
4, 5 trillion after that and went nuts after that. And that's why you're seeing market conditions that don't make sense to a lot of people, because when you throw trillions into the market, that's what happens. So
I agree.
Should be interesting to close the year. Definitely love to have you on again. Disciplined Investor Podcast. See more of Andrew you can. By the way, if you want discounts to his money management service, just give him a call and talk about cooking or boats. And he'll talk to you and be like, oh, I only have $400,000 for the special account. He'll be like, sure, you can come in.
No problem. That's great. All right, Frankie.
But great having you on. Love you, bud. And I'll talk to you soon.
All right, bye.
All right, great stuff from Andrew. Love having him on. Close friend, smart, know he cares. Going everywhere. I can't tell you. It feels like I say that often, but you can't really go everywhere with a lot of people that have general knowledge and really smart and everything. Those are like market junkies, like a Petrides, like a Horowitz. I have several other guests that I can go in different places. Where Rick rules more like commodities and stuff, and some people specialize in banks or analysts and stuff like that, or economists, and having that transparency where you can go anywhere, it's really cool because it often leads to more ideas. It also leads to lots of more emails and people talking more and say, because some people are interested in the economy. Some people are interested in equity. Some people are interested in bonds, right? I mean, the audience, we have 16 million downloads in over 100 countries. So, everyone has different preferences, and the more places we could touch up on, especially since all this is part of the market right now, there's so much news, just Andrew makes for a very, very good guest, and I wanted to have him on. Going forward, probably going to have Charles Payne on Fox. Wow, so happy to see his success. I was on TV with Fox with him 15 years ago. And we were both very big guys then. I think we both lost a little bit of weight. And we used to sit on the couch and make sure we sat on different couches this way. And it looked like two big guys were sitting there. We used to go on early in the morning, and now he has his own show. And man, he's just doing fantastic. And he's out with a new book. So he's just confirming with Fox. He reached out. I reached out to him, and he confirmed and said, yeah, it sounds great. Just going to, reach out to Fox and make sure that it's okay, which it usually was in the past. But again, any interviews you guys want to hear, let me know. Send me an email, frankcurzioresearch.com. And Wednesdays, I want to dedicate to more interviews. I'll try to book one every week. If not, I'd say at least 2 a month, try for 3 a month. And yeah, I want to get some really good guests on it. Guests that challenge me, you don't have the same thesis. Again, you want to learn, you want to get it right. That's the goal, right? The goal is to get it right. And the only way you're going to get it right is talk to people who have a different opinion than you. So, the interview is going to be good. They're in depth. I love to do interviews. I think people love it as well because they have 45 minutes to an hour platform to really share their thoughts, and they're not cut off in a 2-3 minute interview and being asked to explain difficult topics, and inflation or deflation, what the Fed's going to do. And next thing, a lot of the hosts, especially on TV, like talking more than listening, and it results in very poor interviews I see in the media sometimes. With us, we get in the platform. I ask questions and I shut up. I want to hear them. So, if you have anyone on that list, CEOs, people who are industry specialists, again, we've done heads of state, economists, billionaires, been doing interviews for over 15 years on this podcast. So because of you and because of our big following, we're able to capture a lot of great people because they see demographics, they see how many downloads, they look for a track record. And again, we have no strikes on a license or anything. So, we have a very reputable brand and people love coming on and, doing these interviews. And plus they'll call their friends and say, hey, if it's Kramer or Muhammad Al-Arian or whoever throughout the industry, and they'll say, hey, how's Frank Curzio? And they'll all say good things and say, yeah, this guy's awesome, and he does great interviews, because I'm passionate about it, and I want to learn, and I really do the research on these people before I have them on, because I don't want to ask them questions that you're going to hear on TV. I want to try to challenge them in other areas and see some of the things that they say, what industry they're in, what stocks they like, why they like them, and really dig into their thesis and stuff like that. Because I just love learning new models and listening to someone's thesis and breaking it down and stuff like that. Again, it's just fascinating, because everyone's brilliant in certain ways, even in my industry, right? So I could always learn something, and hopefully that translates into you guys learning something. Anyway, so great stuff from Andrew. Love having him on. And let me know if you guys want me to interview. Let me know how that interview went. frankcurzioresearch.com. Now, quick note before I leave. So next week, going to be holding a live webinar. Okay, it's the third series in our Crypto 2024 event. If you haven't attended the first two, these events are really, really good. They're totally live. They're free. We got a pretty big audience for our size company, and we do a Q&A afterwards, and that's live as well. And the Q&A happened to last for an hour, 15 minutes. It sounds crazy when you're on it, but everyone's asking questions, and those questions are really good. We give away lots of ideas. We talk about, different specials that we'll offer for our newsletter, of course, but they're really in depth. And this is going to be the third series. And I haven't said this before, other than about 2-3 weeks ago. I believe Bitcoin's going to 100,000 this year, and I think it's going to surge past that. There are major catalysts right now and tailwinds that, these aren't the traditional tailwinds. They're different from what I told you, where, okay, you got the halving and stuff like that, and Bitcoin, more people getting in, institutions, ETFs. This is different. There's a lot of catalysts on the table right now that are all going to come to fruition within the next month or two. And 5 of these catalysts, to be exact, I'm going to mention. I'm going to talk about them in detail. Okay, it's not going to be a long presentation. I'm going to get right to it. But I'm going to also share my favorite crypto ideas with you, names that can go up 5x or more in 12 to 18 months, just like they did the last time when we had the Bitcoin halving, right? It's only 3 months ago, right? Usually we see Bitcoin soar. When Bitcoin soars, the rest of the market usually goes up tremendously, which it hasn't done yet. Okay, I thought it would happen. It hasn't happened yet, but it is going to happen. And it goes up, well, if you look at the rest of the crypto market outside of Bitcoin, goes up 3 times more than Bitcoin when it surges over the 18-month period. But this time, we are going to see an acceleration in crypto that's going to exceed even the most bullish of forecasts. And I'm going to help you capture some of these gains that could be life-changing. I know you probably heard that term a lot, right? When people say, well, it's life-changing gains. Crypto made life-changing gains for me. Okay, and I've done well in this industry. I've done well. I don't have to work if I don't want to. I love doing this. I love helping people. The reason why I have a beautiful house in one of the nicest neighborhoods in Jacksonville is because of crypto. It was life-changing with the gains that I made in this sector. When you see a bull market in this sector, which is coming, and it's going to come and it's going to surge, right? You got all these, I'm telling you, tailwinds behind Bitcoin right now are going to surge, especially. I'll go over the catalyst with you during the webinar. The gains that you see during bull markets, and I've covered bull markets in different cycles, when it's mining, when it's biotech, and mining, people love junior miners because if you get the cycle right, which happens once every 3, 4, 5 years, and unfortunately it hasn't happened in like 10 years, 12 years in that industry, you could see 2x, 3x, 4x, 5x gains. In crypto, the gains that you normally see during these bull markets are 50x to 100x. You can go back and look for yourself. You can go look at the top 100 cryptos and just look at when they came out and look at when Bitcoin hit highs, and you're going to see many of these things have gone up 10,000%, 15,000%, 20,000%, 100,000%. Okay. And now we're looking at the best names that have sold off, even though Bitcoin's been holding in, doing very, very well. It's off its highs, went in the 50s, now it's in its 60s, back up. I think it's going to go right to 100,000 before year end, and probably a lot higher than that in 2025. You're going to see a lot of the good names, which are down a lot, where you're not going to have to take risk on these crazy, stupid memes and crazy coins, which if you want to do, you do. Some of these things have gone tremendously. People have become very wealthy because of that. But even the best names with the best utility features, things that are disrupting the financial markets right now, which is going to come starting 2025. Okay, you're going to see, now they have the technologies, and in the US it's been a little different, right? You see a lot of these technologies and people launching their own coins and new technologies. Again, these are basically software companies. They're launching them overseas because of the regulation. That's all going to change. So that's one of the catalysts I'll give away, which you all know, is Trump is pro-crypto. Okay, you're going to have someone there. It's going to provide regulation where trillions of dollars is going to come into this industry. People are going to start crypto companies here, and the banks are going to accept them. Okay, that's a whole different level than where we've been with the previous administration. Okay, so that's just one of the catalysts I'm sharing. And these names tend to go up tremendously. Again, 50x to 100x. I'm not bullshitting you here. You can go in and do the research yourself to see some of these gains that you see in these names when you have a bullish cycle in Bitcoin, because they outperform Bitcoin at least 3-1 on average, but a lot of them even higher than that. So I'm very bullish. You don't have to take my word for it. You could listen to some of the top names in the industry that haven't been crazy bullish, which is Mike Novogratz, Winklevoss twins. Remember, these guys used to be Democrats. Now they're all jumping aboard. Because they run their companies in an industry that's going to be pro-crypto if Trump wins the election, and Trump is leading. Trump is leading right now. Okay, Democrats are kind of have no idea what's going on. Channels, Biden just dropped out. Again, it looks like the odds is that you're going to have a Trump presidency, and he is pushing crypto. He's even speaking at an event later this week, at the Bitcoin event, and he's probably going to provide some framework. And that's what these guys want, like Novogratz, Winklevoss twins, Anderson Horowitz, these guys, billionaires. And also Larry Fink. Yes, we know he launched ETFs. He manages over $10 trillion. You should have heard him. If you haven't heard on CNBC, this is about a couple weeks ago, all in on Bitcoin. Remember, Bitcoin is crypto. It's not just Bitcoin and Ethereum. Bitcoin and Ethereum surge. You have all the Ethereum ETFs coming out, right? They're just starting to launch now. You're seeing lots of inflows. Now, when you're looking at Bitcoin going higher, Ethereum going higher, this opens the door for the whole entire industry. Okay, it's like Exxon surging to new highs. You're going to see a lot of energy producers do well, right? The whole entire industry does well. And usually when you see a bull market in an industry, it's the names way down on the list that are going to show you the biggest gains. Just like when you see it on a downturn, the largest company usually goes down, 10, 20%, but the more aggressive names are going to go down even more and underperform the market. But on the way up, they outperform the market significantly. And I'm going to show you how. So much so that I'm going to put another $100,000 of my own money into crypto. And I'm going to share some of those names right now in our crypto intelligence portfolio. There are 14 names that are currently buys in that portfolio. And this is what I do. I like to get you in when it's a great opportunity for crypto. And right now, we've seen crypto pull back a little bit more than expected. But now with these catalysts coming, it's very excited. So I'm launching this. I told my team, listen, we're doing this next week. Okay, next week, it looks like August 1st, Thursday. I'm going to confirm that date early next week. If you're on our email lists at Curzio Research, we'll definitely notify you. We'll also be talking about it on the podcasts. If you're not on a list, go to CurzioResearch.com, put your email in at the bottom of the page, so you'll opt in, where we're not going to send you millions of emails, but you'll get free reports that we offer, free research, free write-ups, updates on special offers for our newsletters, and also notifications on our upcoming webinar events. So again, 14 of those names are strong buys in our portfolio right now. I'm going to share some of them with you during the webinar event. And again, it's 100% free. Usually it's a 15-minute presentation. Sometimes it might go a little bit longer than that. And then we do a live Q&A, and I've stayed on for an hour, 15, hour, 20 minutes. We do it pretty much. I think we start 6, 7 o'clock. And the reason why I stay on is because we can monitor how many people are still on the call, and a ton of people, like 80% of the people usually stay on, and they're asking questions, and it's a lot of fun. And, and it is live. So live is cool. I don't care. We make a mistake, you can call us out on it. It's really cool, but everything is live, which you don't see in these events. I don't know if anyone does them 100% live. Sometimes they do. But a lot of people like to tape these things with me. If we make a mistake, That's cool. It's part of the job, and we'll just keep flowing. But, live is really cool. And when you do it live, it really shows you who knows their shit and who doesn't, because it's not scripted. I have bullets in there, and I'm going to share certain things with you and make sure I touch up on them. But, I'm not just reading off a prompter and a script and just telling you, because I know a lot of this stuff like the back of my hand. That's why I'm investing in it. Right. And sometimes you don't see that in this industry where, just a guy reading off a screen and say, and you could tell. This is different. Our live webinars are really, really cool. Hopefully a lot of you would join us. If you haven't, again, you can join us very easily. We're going to send you a link. We'll have it on our website pretty much the next couple of days. But right now, tentative date is going to be Thursday, August 1st. And definitely, if you could attend, it's for free. You don't have to purchase anything. Yes, we're going to sell our crypto intelligence newsletter, because I want you to buy that newsletter right now, because I think you can make a shitload of money off of it. And that's how we do well in the newsletter business. Because if I make you money, you're going to subscribe to more of our products. It's that simple. Right. So what I want to do is, if you're coming in, if you never bought one of our products, or If you're coming in, you did, and we're able to make you money off of it, then you build that trust factor. It's a reason why I've been doing this for 30 years. And a lot of people do it for 5 years or 7 years and eventually burn their clients out. With us, I like to offer certain deals at certain times when I think you're going to make the most money. This way, you build a trust factor and you become a client for life, which is what we want. Again, that's why I've been doing it for so long. We have such great contacts and a great podcast. So if you're interested, definitely attend. You're going to see more emails coming out on it if you're on an email list. And we mentioned on the podcast, again, to get on an email list, you can go to CurzioResearch.com. So guys, that's it for me. Thanks so much for listening to the podcast and the interview. Questions, comments, I'm here for you. FrankCurzioResearch.com. And I'll see you guys tomorrow on Wall Street Unplugged Premium. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Including the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.